Hey guys, welcome back to We Talk Money. How's it going, folks?
Pretty good. I do have a question.
Yes.
Am I giving off too many Theranos vibes with my black turtleneck?
Definitely.
Only if you make your voice like this.
You know what's funny about that is I'm super paranoid about my squeaky voice. So maybe I do need to do that.
Yeah,
maybe
bring it down a couple of octaves.
Raise a few billion in capital. Why not?
She's kind of ruined the black turtleneck for me. Just going to put that out there.
No, you look great in it. Well, we're kicking into fall time, I guess. How you guys doing in the markets?
It's actually a really exciting time. I will say this week is a little bit boring in terms of news flow, but we've got some stocks that are popping off still, so we've been enjoying it.
Nice. Yeah, you guys had some big trades. Also in the crypto space, there's actually a lot happening right now. There's kind of like this theme of the merging of the traditional banking system and finance with crypto. Why don't we just go ahead and jump into some of those things? We can knock them out real quick. So I think it was last week or the week before that, Kraken got their bank charter. So this is huge. We're starting to see crypto actually kind of merge with the traditional banking system. Along with that, we had the SEC and the OCC basically offer guidance to make it to make banks feel more comfortable with working with stable coins, right? So right now you've got like cryptocurrencies that are like truly decentralized and borderless like Bitcoin. Then you've got stable coins, right? Like Tether and USDC. And basically the fact that the US government is offering friendly guidance towards stable coins, I think is very, very bullish for the crypto space in general. Also, we had Wealthsimple, which is the first regulated crypto trading platform in Canada, which Canadians have been kind of underserved. You know, they had the Quadriga CX thing from a couple years ago, which was the main exchange, and then the founder, quote unquote, died. Maybe, you know, a lot of speculation still around that. We found out that he was basically trading customers' capital. It was like just a classic story of misappropriating funds.
Yeah.
And then, I don't know, just a whole lot happening in that space.
Yeah, I mean, these are the steps that people need to see being taken to trust the crypto sphere.
Yeah.
You know, that's been one of the biggest barriers, right, is trusting the ecosystem. And I think stuff like this kind of helps put that together for people.
Yeah, because, every year that goes by, the Bitcoin protocol doesn't get hacked. That's just another year of proof that, like, hey, Bitcoin's here to stay.
True.
But then, the whole on-ramp thing, right? The on and off ramp to the traditional fiat system is important today. And also, access to just really reliable trading platforms. And, I think Kraken's come a long way. We used to joke in the early days about how anytime the price would move, Kraken and Coinbase and all the exchanges would just get locked down and they couldn't do anything. But, I got to give them a round of applause. They've come a long way.
That's
Absolutely.
Robinhood's job now to do that.
Yeah.
To crash when there's actually any real volume. Yeah. Yeah, no, it's great to see this. Yeah, like you said, I think the on-ramp part of it is huge. A lot of, with Kraken getting the banking charter like that creates potentially in the future, we don't know exactly what products they're going to be offering, but you could imagine them really starting to get creative with some of the things that they can offer as far as money transfers in and out and being able to convert crypto to fiat and vice versa.
Yeah.
That's huge.
And kind of on the extreme other side of the traditional finance system is you've got DeFi, right? Like that's kind of the hot topic for this year is, things like Yearn and Uniswap and kind of like on the fringes, things that are innovating alongside of this, which I think are equally bullish.
Absolutely, yeah.
There's also a lot of hot air and a lot of scams in that space. But, I think the big difference between what I'm seeing now and what we saw like in 2017 with the ICO boom is the ICO boom was basically a bunch of scammers writing white papers and putting up a landing page on a website and saying, I'm going to change the world with this project. With DeFi and these decentralized exchanges and a lot of these automated market makers and stuff like that, it's actually working. Right? Like it's not just an idea, like it's actually trading and there's billions of dollars in this ecosystem, which is crazy to think about, man.
Yeah. It's exciting, man. It's like, kind of reminds me of like the .com era when you had all these like really crappy companies try to go public and for a while they were hot and then the whole thing cratered. But then like in the aftermath of that, you actually had real growth of the true good businesses and products that came out of that.
Yeah, the cream rose to the top.
Yeah. That's why I'm not, I don't have FOMO on every project that comes out, you know, like, cause I know there's a lot of risk in the DeFi space, right? Like with the YAM and some of the other ones that basically imploded in the span of like a day or two. Like, I'm risk adverse when it comes to that. I don't have to be first to the party to make a lot of money, right? Like I can sit back, I can watch, I can judge the risk and then participate when I feel like the risk to reward is asymmetric, right? Where there's a lot of upside and not only can I quantify what the risk is, but I feel like I have a grasp on it and I understand it. But like a lot of the newer folks into crypto that are still trying to get rich quick, like they chase these things and then they wonder why they lose like most, if not all their money. So just got to be careful.
Yeah.
Let's talk about stocks though. I know you guys have had some big movers. The stock market in general actually had a pretty deep pullback over the past couple of weeks. If we look at the NASDAQ, you can see as of yesterday, we were about 14 or 15% off of the all-time high from earlier in the month. What's the general theme? What are you guys seeing in the stock market?
You know, I think that originally this was just a well-needed cool-off in the markets, a normal, healthy correction. And then, like, over the past few sessions, it's felt like more of the fears of lockdowns, more lockdowns, especially in Europe, you know, potential lockdowns coming back on that side. And I think that the market was feeling like it was kind of trading off of that a little bit and a little panicky. But then it's just it's holding up for now.
Yeah, I agree. I agree with that. Actually, when you look at some of the individual stocks underneath the market, you would see stocks like Zoom continuing to actually go up, and then some of the harder like hit coronavirus related stocks like the retail stocks and travel stocks have been having a really hard time over the last couple of weeks. And so that to me does indicate perhaps there is a trade on here for some firms where they're thinking that we could go into more shutdowns or that the economy is hitting another second headwind here as we move into the fall timeframe. So interesting to watch the patterns in the market here. It also could just be like quant funds still trying to hop on the momentum train. You know, NASDAQ last 2 days or so has shown some strength relative to other areas. So perhaps it's just that, but it does feel a little bit like there's some concerns here about the economy.
And it feels a little all over the place. Like one day you'll see the recovery plays green and then the tech stocks down. And then the other week it's the opposite. We're kind of all over the place. Right now it feels like the market can't quite get a handle on what is going to happen.
Yeah.
It doesn't know if it needs to bet on the recovery or if it needs to, you know, go heavy into work from home stuff. At least that's kind of what my take has been watching it.
Yeah, I mean, it's not surprising. If we look at the chart, I mean, we've basically been in a bull market, just a straight bull run since early April, you know, during obviously later part of February and March, the stock market panicked. And then ever since then, we've just been in like this grindy bull market. Things got overheated in early September, and then we've had a pullback. So you guys are definitely seeing like a mixed bag.
Absolutely.
Yeah. And to be honest, I actually, when I look at the technicals of this chart and you see the move that has happened from March to now, I think this is a shallow pullback. I mean, it's about a 23% retracement from March lows. And if you really think about it in that perspective, it doesn't really feel like it's really come down a whole lot.
Yeah.
So I do think there's more room to go lower for sure. But otherwise, I'm happy to see some type of correction from March.
Cool. So a little bit of a pullback, a little bit of a mixed bag. What kind of plays have you guys had recently?
Well, today I just took profit on GME, which was a short squeeze play that actually Travis had this original idea on GME. GME's GameStop. And he had the thought that since it had such a high short interest, that it could be a really big potential squeezer. So he had brought it up in the community, and I just ended up trading it. And yeah, it's squeezing.
Nice. So GameStop is basically going the way of like Toys R Us or Blockbuster, right?
I would say
But there is a bull case here, right? Or
Yes.
what's the bull case?
Yeah, there's some interesting dynamics here. So bull case is that they've got some time to transition to a model where they have fewer but profitable stores, and also they've got some online sales that can help keep them afloat. Remember, this cycle of new game consoles, the Xbox and the PS5, is it?
Yep.
They have disk drive still. So they're still going to be selling at least some games on disk. And that the thinking is GameStop will get some business from that. They'll get business from actually selling the consoles in store. And then when people come in to buy consoles in store, they'll be buying controllers and other things like that. So there's an argument to be made that they can survive for at least another year or two and then figure out a business transition scenario.
Yeah.
And then, there's a pretty interesting financial profile of the company. They've been reducing debt. They do have a pretty good sized cash balance. But the worry is, of course, if they burn too much cash, they can burn through their cash pile. So interesting bears and bulls on both sides of this. The most interesting thing about it, though, is that 100% of the shares are sold short. So I don't think I've ever seen a stock that's sold short that heavily. I think I've seen stocks where the float was maybe 80 or 90% sold short. You see a lot of stocks 40 to 50% of the float sold short. But that means that when you start getting a rise in the stock, then you have a self-fulfilling prophecy where shorts have to cover. And you could end up with a situation like Volkswagen in 2008, where you get the stock squeezing up, triple-digit percentages.
Or Weight Watchers.
Yep, Weight Watchers.
Or Overstock. They had a
Overstock.
pretty high short interest.
Yep.
All of these.
So this
scenarios.
is super interesting to me, right? On a couple of fronts. A, the business, right? Like GameStop going the way of Blockbuster. Is there a real use case for the future? Even if not, like the fact that you can make a lot of money on stuff that's been beat to crap, right? So if we look at the chart, it's down like 95%, right? It was back here like $60 back in 2014. And then what was the low here recently, down in like the $2 to $3 mark. And so tell me like what the trade was and how you guys executed it.
So I actually, the timing on this was a little bit fortuitous because I'd been kind of keeping an eye on this thing, and I wasn't going to buy it, when it was too far away from the new console cycle, because I was worried that the new consoles might not have disk drives or GameStop might go out of business before that. But around early August, I actually tweeted about this and mentioned it in our community as a potential trade idea. I was saying, we're getting pretty close to the new console launches here. GameStop has been doing some interesting things on the balance sheet side. They've been buying back some of their debt at a discount. They've been managing the business to produce some cash. So it was all sort of aligning. Plus you had the short interest. Forgot to mention, by the way, there's an activist investor that just got involved in the stock.
On the long or the short side?
The long side.
Co-founder of Chewy's.
Yep, Chewy, the
Chewy,
online pet retailer. He was one of the founders of that business. Obviously, that business has done well, went public at a multi-billion-dollar valuation. He has invested some of his capital from his exit in just, I think, 2 or 3 stocks. And one of those stocks is GameStop, in which he's taken, I believe, almost a 10% stake in the business.
It was like 9.9%.
Yeah.
To get below the SEC threshold.
That's right.
Yeah.
So he has some ideas. He's been talking with the board as well about ways that they can position the business going forward. So there's all these dynamics at play. And our idea is, I was actually looking at some of the call options on it early August timeframe. And then also we looked at the stock just outright as buying that, because again, if you get a massive short squeeze in a short period of time, it could be up 200 or 300% in a hurry.
Yeah. So let's just, for anybody that doesn't know what a short squeeze is, maybe do like a little masterclass on it. So you can go long a stock, you can go short a stock, right? Long is betting that the stock's going to go up. Short is betting the stock's going to go down. It's almost like if you get everybody who's betting on the stock that's going to go down, that's inherently like bullish pressure, because those people have to buy back, right? If you sell shares short and the market goes down, those people have to cover, which means they have to buy back those shares. So if everybody's short, all it takes is a little bit of buying to kind of create that waterfall effect or the domino effect of buying activity. And that's essentially what I think a short squeeze is, right?
That's right. Yeah.
It's the slow grind higher. I call it the slow death to shorts. And this is kind of what GME actually ended up doing and is still doing. But yeah, essentially they get spooked out as the price starts to move higher, and then the momentum, it's like a waterfall.
So it's kind of like the inverse. If you're long and you start to see a pullback, right? If you say you bought Bitcoin at 4,000, you see it get to 12,000 and it starts to pull back, you take profit, and then that creates that like that waterfall of like everybody rushing for the exit at the same time. Except here it creates a stock run. So for you guys listening to the podcast, the chart basically looks like this. It was bottoming out in between like $3 and $4 over the past few months, and then recently made a rip today to 11.
Yeah. I think I tweeted about it around $4. Like I said, in early August or so, that's when we really got involved with it.
Yeah.
Nice.
And, sometimes you just got to get lucky on timing. But the bears will say here that eventually this thing is a zero. And so if you're short, don't worry about the short squeeze and you'll ride it to zero eventually. But there's that famous saying that, the markets can remain irrational longer than you can remain solvent. So I wouldn't want to be short something like this with such a high short interest.
Not now, not with this price action, the way it's been behaving.
Yeah.
It's been very resilient and a lot of momentum behind it. So yeah, I wouldn't want to be short. I do have a question for you guys though, because I'm not much of a gamer, but I do like makeup. And I'm wondering when I think about because I think Ryan said that he could see GameStop competing with Amazon. When I think about females getting makeup, Ulta's our place. We don't want to buy makeup at Amazon anymore because we can't trust if the makeup's going to be good quality, etc. Could GameStop be that for gamers, where gamers need somewhere they can trust to get their games, or is that a thing?
I guess the question is like, it'll be really interesting to see. I know the PS5, you have the disc option versus diskless, which is you just download the games on your hard drive. I'd be curious to see what percentage actually sell discs and if it's going to be significant. So you guys can't see, but Kevin is our producer behind the scenes. Kevin, just give us a thumbs up or a thumbs down on GameStop long term.
Yes.
Thumbs down. Okay, you heard it. He's a huge gamer, so
he is. So, yeah, if anybody would know, it would be Kevin.
Yeah,
I would agree with that. This is not a business I'd want to own long term because most of the major platforms have digital downloads now. Xbox, of course, there's Steam, and PlayStation has theirs. And I will say the one problem with digital downloads is they take forever. Like it could take you a day or two to get a game downloaded, especially when the game is just released, because for whatever reason, the servers that they're using to allow people to download the games are just overloaded, or there's not enough capacity. It's super annoying.
Yeah.
So I could see why some people might want to go and get the disc. But when you get a disc and you load it up, you still have to download updates sometimes. So even if you've got a disc, sometimes you've got to download a massive update on your console. So it's like, does it really save you time or not? That's an argument I'm not sure holds a whole lot of weight. So I'm not sure about the physical discs saving them. I do think having the consoles being sold in their stores will bring people in more so than they have been, earlier this year. And that will lead to some amount of controller sales and accessory sales and things like that. And GameStop does have a collectibles business as well. And that means, they're selling stuff like old nostalgic games or old, different board games and things like that people really like from back in the day. And so they have a business there too that's not related necessarily to games. And then also they're trying to position themselves to do other new things like LAN parties and stuff like that, which maybe works for some of the stores. So it's going to be really interesting to see it all play out over the next couple of years. They're going to have to move really quickly to shift everything if they're going to survive.
But will we always have consoles? Gaming consoles? Are gaming consoles going to go extinct?
I don't know. PC Master Race people, comment below. Let me know what you think.
I don't know.
I mean, look at the gaming cards that are needed and how big those things are now.
Yeah.
I always thought we would move to a thin client eventually, where you just have a tiny little puck computer and that would just download everything and stream things through the puck. But now a lot of these games need these massive NVIDIA cards to run the graphics. And so you still end up with something that's big. So why wouldn't it be a console? I don't know.
So I guess the question is, and this is the potential bull case, is will GameStop become the Ulta, the makeup trusted beauty store for gamers? Will it become a hangout spot, or will they figure out the business? Who knows? Like you said, I don't think long term it's a wise thing to just hold on until they prove something. But this is a good case study for how you can make a lot of money actively trading, kind of in the short to medium term. So Nick, just give us your trading plan on this. What did you do? What's happened so far?
Yeah, so I entered in it was like mid fours. I think it was 460.
460. So you bought around 460?
Yeah, and then I basically held it through both of those pullbacks, and I took some off the table today. I took most of the position off the table today.
Around what, in the 10s?
1050.
Oh, nice.
Yeah.
So you made over 100%?
Yeah, 1050 was my first target, actually.
Dope.
So I knew my profit targets going into it.
Yep.
I held for my profit targets. I paid close attention to the price action along the way.
Yep.
And the price action never came out of tact. I mean, it was intact the whole entire time. This was a beautiful trade.
Yeah. You basically got the initial squeeze and then the pullback to retest the breakout and then the second extension.
And a lot of people got shaken out on that pullback to retest the breakout level around 6. And actually, I have to address a few questions in the community about that after this, because people are wondering, you know, what was my thought process? How did I stick to it and stick through it? So,
oh yeah. Well, congrats.
Yeah, thanks.
Great job. Nice. So, any other big movers in the stock market? Anything interesting you guys want to cover?
Well, I've got a couple of, so I'm going to be releasing an update video on one of the positions that I've owned for a while, the shopping center REIT Macerich, MAC.
That's right.
And, you know, along with a lot of the retail stocks out there, this one is just kind of in no man's land. Doesn't appear to be like
it's
kind of flatlined since the beginning of the year here.
Yeah, we got a nice little pop in early spring, but since then it's been pretty dismal as far as share price performance. And I still really think this is a fantastic play for about an 18 to 24 month time frame. Certainly some risk here, but I think it's a pretty misunderstood company. So I'm posting my update on my YouTube channel here in the next day or two on that. And I think that could be a triple. It's pretty interesting setup from here, I think. Pretty good risk reward, but that one hasn't quite played out yet. I've got a couple special situations that I'm watching, and I think there's actually some pretty interesting values out there in the market. And, you know, I was looking today at like Nordstrom's, JWN.
Oh, yeah. Nordstrom is getting extremely interesting to me.
You know, management had some really positive comments out at a conference that they were at just, I believe, earlier in the week or late last week. Stock has been totally decimated, down 80, 90%. Obviously, a lot of their stores were closed during the coronavirus crisis. A lot of those now reopened. Most of their stores are in very high-quality mall properties. They're also an omni-channel retailer. They get about a third of their sales online. So there's a lot to like here. Good management team. You know, it's a Nordstrom family that still runs the business. Management actually got a bunch of new stock options that were struck closer to today's price. So they've got a lot of incentive to make the stock work from here longer term. So pretty interesting setup, starting to get very, very cheap from a, you know, looking at a price to earnings or potential earnings perspective. But you've got to be able to hold through what might be a little bit of a rocky retail environment over the next couple of months and quarters.
So that's interesting because over the past couple of weeks, I know you guys have been kind of frustrated as buyers go in the market because everything's been so hot. So you guys have been taking a lot of profit on positions from the spring. So now it seems like things on the pullback, you're starting to get maybe better value options.
Well, I mean, I particularly have my eye on the recovery plays, you know, retail, travel, things like that.
Yeah.
This is where you're going to find the deep value if we are going to come out of this thing alive. You know, coming out of 2020.
I tend to bet on humanity with that. Yeah, I think we're going to be all right.
Yeah, you know, there's a lot to like about a lot of the recovery replays, and like Nordstrom's a great example of that. And when you actually dig into the fundamentals of the company and look at valuations, it can be pretty compelling stuff. And it's heavily shorted too. It has a high short interest around 40% right now.
Nice.
I need to double check the exact number, but I think that's around what it is. That's not low. That's high. A lot of people are betting against Nordstrom. And if there's one thing I love, it's a good short squeeze. So I'm definitely, stuff like this really gets me excited.
Cool. Well, thanks for sharing that, guys.
For sure.
Super interesting stuff. You know, it's interesting too, because in the crypto space, like, we've seen a lot of the DeFi stuff get hammered, but if we look at Bitcoin on a super long-term chart, you can see, I mean, we're still, you know, trying to turn 10K from multi-year resistance. Really, I mean, most of the trading activity, you know, we got above 10K back in 2017 for just a couple of weeks, maybe 3 weeks or 4 weeks. And then back here in 2019, we got above it for a week or two. And then right now, this is really the third attempt where Bitcoin's trying to kind of break out of this zone. And if we look at a log chart, so a logarithmic chart is good at showing like exponential gain. And you can see, I mean, we are really starting to test multi-year resistance here. So I think not only are the stock markets at a big inflection point, but also crypto and gold, right? So we can talk about gold in a second, but I mean, it's actually been testing really strong resistance, broke out to a new all-time high from the 2011 highs and also pulling back to retest. So you got the S&P that broke a new all-time high, pulling back to retest. You got gold that broke a new all-time high, pulling back to retest. And you got Bitcoin that's broke, in my opinion, what is the most important price level in its history and pulling back to retest. So we're at like really, really big inflection points in the market. And, you know, there's a lot of risk. There's a lot of uncertainty with the virus flaring back up. And, you know, like we can talk about European banks and stuff that are gotten hit pretty hard. But I think this is one of those moments in history where we're going to look back a few months from now and go, that's where a lot of the big plays started popping off from.
Mm-hmm.
Yeah.
Yeah. Politics, unfortunately, is playing a big role in this because I think one of the big drivers of all of this is the lack of that second stimulus package getting done in the U.S. has put some doubts in the minds of people that were buying gold and Bitcoin as a inflation hedge. And so now they're like, well, if we're not going to get another fiscal stim package, then that monetary debasement pressure won't necessarily be as great, at least in the near term.
Yeah.
And you've also got, you know, uncertainty around elections and things like that. So people are kind of pulling back their inflation expectations a little bit here, which does, I think, hurt some of the metals and Bitcoin and maybe even the stock market in some ways. But I'm not sure I 100% believe in that view. I think looking out a little further beyond the, you know, just this month, I think you still have a lot of the same dynamics in play. The Fed obviously has said they're going to be accommodative. They're going to keep interest rates essentially where they are.
We're going to do whatever it takes.
Yes.
Now, I will say the Fed needs the fiscal stimulus. Think about it this way. You know, the Fed would not be able to monetize debt. There wouldn't be debt that exists from the government if there wasn't spending in excess of tax revenue, right? So you need the government to spend money well in excess of the revenue they're taking in on taxes. You need that fiscal deficit for there to be debt to monetize for the Fed. So the Fed can only do so much with monetizing debt and, you know, working with monetary policy. They need the fiscal stim side to actually provide people, you know, like in the middle class with money that can get them through these types of environments.
Spend money, government. Spend money.
So, yeah, you know, let's just say that the Fed, although they're being accommodative, they also need some of these other players to step up.
Yeah. Yeah. They can't just operate as a sole driver of the economy. Speaking of that, let's talk about, man, there's a few things kind of on the macro side between, like, you know, we've got Biden's tax increase. You know, Nick, if you want to talk about that, we've also got like the FinCEN file showing that banks are, oh my God, did you guys know that banks actually laundered money and we're in with that? You know, but they like to point the finger at the crypto sphere, but a majority of the illegal shit is actually happening where? Oh, the traditional banking system. Isn't that convenient? Yeah. Anyway, before we go there, Nick, what do we need to know about Biden's proposed tax increases?
Yes, look, as investors, I'm going to give you the breakdown of what you need to know. Okay, the biggest thing, and this is like, I'm not trying to be political one way or another. This is just the facts.
Yep.
What these potential policies could do for your retirement and your assets. So the two main things is Biden is proposing an increase in the capital gains tax from the highest right now is 20%, technically 23.8% with the Medicare surcharge tax, but 20%. He's going to bump that up for high income individuals to, I think it was 39.6%, the highest tax bracket. So what that could look like is if you hold assets that have a lot of appreciation in the markets, boomers have been holding assets forever, you know, have millions of dollars worth of appreciation, you might see some selling if Biden does get the presidency and we think that these policies could actually go through.
Selling before the tax rates go up?
Yeah, to lock in that 20%, because the other reason for that is the potential thing that could happen is removing the step up in basis for if you inherit assets. So when people inherit assets, they get something called a step up in basis that helps them basically pay little to no tax on the assets that they inherit from their the decedent. Well, if you remove the step up in basis, essentially the assets that you inherit, you're going to be looking at a tax bill.
Can you give us like a real basic example of what that could look like?
Yeah. So let's say your parents bought a house in the 70s for $100,000 and you inherit it when they die for $1 million. Instead of you inheriting your parents' tax basis of $100,000, you're essentially getting a step up, and your cost basis is going to now be the value of the property at the time of death, which is $1 million. So say you turn right around and you sell it for $1 million, you're going to have basically no tax because you're getting that step up in basis of from 100,000 to $1 million.
Yeah.
That's what I think I said that's what the property was worth. Right?
Yeah.
Oh yeah.
So that could potentially save you like 6 figures in a tax bill, right?
Massive amounts of money.
Yeah.
And
it's a big deal.
Granted, people that are really wealthy, whatever, like I'm sure everyone's like, let them pay more tax, whatever.
Yeah.
But who it could really suck for is millennials and Gen Z who are inheriting all of this boomer money. You know, we've seen some crazy appreciation over their time, and the millennials and Gen Z are going to be inheriting it, and potentially they're going to, have to pay a tax bill. Is it the end of the world? At least you're inheriting something. Sure, it's not the end of the world, but it's something to consider. And it's also a big factor in estate planning currently. So now planners and asset managers, if this does happen, we're going to have to completely rethink estate planning.
Wow. That's a big deal.
Because a lot of people, they will not sell their assets because they want their heirs to inherit them.
Yeah.
And get that.
So is that the core biggest things is the capital gains change and the step up in basis?
There were a few other things like increasing the top tax bracket back to where it was before the Trump tax cuts, 39.6%, and then increasing the corporate tax rate from 21% to 28%. But I don't really think that that's that big of a deal. You analyze financial reports all the time for corporations. It was a big deal to go from 35 to 21, but going from 21 to 28, it's definitely going to hurt profits a little bit. But, we're still staying competitive with corporate tax rates that are in other countries.
Yeah.
And that's the main thing. We want to stay competitive with other countries.
Yeah, that's a good point, right? Because if we are either way too low or way too high, you're going to see capital flight one way or the other. We were talking about this actually on the boat over the weekend about the idea of California trying to have the wealth tax and increase their state income. Like one thing that they need to keep in mind is Americans can move freely between states, and we're already seeing a capital flight out of there. So my opinion, and I want to hear what you guys think of this, but I think it's going to be harder and harder for states to really kind of go outside of the norm. And if they increase taxes too much, smart entrepreneurs and investors are going to get the hell out of there. What do you guys make of that?
I 100% agree. I think you're already seeing some of that flight come out of California. Even famous entrepreneurs, Joe Rogan, Elon Musk, they're moving to states that don't have income tax because, those entrepreneurs have quite a lot to lose in terms of taxes if they stay in California. So I think absolutely on a state-by-state basis, if your tax rates get pushed up way too high, then that's going to have consequences.
Yeah. And as Tim Draper said, we are like, governments are going to start competing harder for talent, right? Like not only in the US, but there's already, the world is getting smaller, right? And smart entrepreneurs and investors are going to go where they are treated the most fairly when it comes to taxes and regulation. And, I'm glad to see that the SEC and the OCC and in the US, they're starting to offer more, I guess, balanced regulation. And, we're seeing kind of the merger of the crypto space with the traditional finance space. That's a step in the right direction. I just hope the US doesn't shit the bed on the tax side, because that could be a real driver of talent away from the US.
I agree. It's weird to see the Democrats embracing tax plans that significantly increase tax rates. I think that is a little bit short-sighted, especially given what we've seen. The US government, the market's saying, hey, you can borrow for 30 years at 1 or 1.5%. So why do we feel the need to raise taxes? Why don't they just continue to run deficits and until the market says, hey, no more, we're raising interest rates for you. Obviously, the Fed has some role there too by monetizing debt and keeping rates low. But, we don't have super high inflation right now. So I don't see the need to necessarily raise these tax rates up so massively. And like you said, it also hurts competitiveness globally. So, I think that's an area where you could absolutely be critical about some of the plans in place. So
as long as the middle class is especially taken care of when it comes to tax law, that's something that I think about a lot. So hopefully whatever, candidate gets into the office, hopefully those tax laws are conducive to the middle class.
Yeah. Awesome. Well, let's talk about some Q&A. You guys want to jump into some questions?
Let's do it.
So M. Fritz was asking, should I have multiple bank and brokerage accounts? Nikki, I'll kick that one to you.
Yeah. So really when you want to have multiple accounts is when you start getting above like FDIC insurance limits, or I think it's SIPC insurance limits, which it's $250,000 for a bank, like cash for FDIC insurance, and then it's $500,000 for brokerage accounts. Like if your brokerage goes under, it doesn't cover your losses. If you buy Tesla and Tesla goes to zero, it doesn't cover that. But
it's not going to happen.
It covers, if you own stocks with a brokerage and the brokerage just goes belly up.
Yeah.
So yeah, that would be a great reason to have multiple accounts to make sure that those assets are under those coverage limits. You don't have to, but it's a good idea. And then, if you're not close to those thresholds, it's really about service. It's fine to have multiple accounts. It gives you more access to different types of services or technology that may be offered by different brokerages or banks. I don't know. Do you have any thoughts on that?
No, I think you pretty much hit it on the head there. I mean, you want to diversify that risk, just as you would in crypto with, stock brokerage accounts and bank accounts to some extent. And you can work with advisors who can help with this as well. So you want to be as protected as you can be.
Yeah. I've always thought about the cash side of stuff. So what is it? We don't keep more than a quarter or $500,000 of cash in any given bank account. But when it comes to the brokerage account side, can you have I guess you couldn't do this, have multiple accounts at the same brokerage and still be covered? It's probably tied to your name and your social.
Yeah.
So you can't have 10 accounts at IB with $500,000 in it. You'd need to actually be at different institutions.
I don't think so. I know with banks with cash accounts, that's different.
Yeah.
That they'll look at you as the person and then you get $250, and if it's a joint account, but you can have $250 for each type of category is what we call it. So if you have a CD and if you have, a checking account, those could be two different things.
Yeah. So you could double up.
Brokerage accounts. Do you know the answer to that?
I actually don't. I would imagine though, if you have different types of accounts, like a non-taxable versus taxable, you might have some separation there.
Yeah.
But I'm not actually sure about the multiple accounts under the same name that are of the same type.
I guess that's why you're going to actually go with a brokerage that and I'm using my quotey fingers here, that you trust, right?
Yeah.
I trust stock brokerage accounts more than I trust crypto exchanges, right?
Yeah.
It's a completely different infrastructure and way of operating. And if you don't control your keys, you don't control your coins. If you don't control your stock assets that, there's infrastructure for that in today's world.
Yeah.
So I'm less worried about that than say crypto, private keys, or even cash in the bank. Cash in the bank kind of freaks me out even a little bit. That's why we have so many damn different checking accounts.
Rather the stocks, have the brokerage accounts. You can have brokerage accounts run millions of dollars in the account, and it's usually fine.
Yeah.
You don't have to break it up.
Yeah, I don't worry so much about that.
Yeah. But the cash.
Cash is a little funky. Judith asks, how do I start investing in real estate? I guess I could take this one.
Yeah, either of you guys.
Sure. Yeah, I mean, you've got to figure out, do you want to be passive or active? That's the first question. Do you want to really go out there and try to hunt for houses? I did this in my late teens, early 20s. I was doing the signs on the side of the road. I was doing the mailers. I was buying junkers. That's a lot of damn work. That is a lot of work. It's almost a profession. If you want to be a real estate investor, the ones that I know that do well, they're full-time in it.
Oh, yeah.
They're full-time. Or you can be like an LP. You could be a limited partner in a fund, or you could invest with a partner who does the work and you're the cash lady or man. But real estate is great if you know what you're doing, but just like in the stock market, you can lose a lot of money if you screw it up. And I've done that. Anytime I lay hands on a real estate deal, it typically loses money. So I just stop laying hands on it and I let other people that are better at it do the hard work. So that's my, I guess, initial thing is don't believe the late night infomercial BS about like you can make $1 million with no money down. No, you can get realistic returns, and you can juice the returns if you know how to negotiate and work really well and create beautiful projects. Otherwise, maybe go buy a real estate token or real estate equity in a private or public REIT.
Yeah, that's a great point. Yeah, you can get passive exposure pretty easily just through the stock market, investing in real estate investment trusts.
Yep.
Now, a lot of those have been hit pretty hard, and you got to be very careful about which REITs you invest in. But that is an option if you want to just have some exposure without doing all the active work. As far as learning about investing in real estate, that's probably one of the first places you're going to want to start too. If you're not that up to speed on how a lot of that works, you'll probably want to spend some time really trying to understand, things like different types of properties, what taxes are, the 1031 exchanges. There's a lot of detail in there that like you said, like you're competing against people who do this professionally. And although the real estate market can be inefficient in certain local areas, it's gotten a lot more competitive over the years. So you don't want to just go in blindly.
Yeah. Especially if you're in a hot market like here in Austin, like you're looking at maybe positive cap rates, like 3 or 4% returns, like if you do it right. I mean, we have buddies that are in the builder business and they do well, but again, they've got a team of professionals and they know what they're doing. So
what's the saying? You make money when you buy real estate.
You make money when you buy, and the caveat is if you don't screw it up while you're holding it, which is very easy to do too. If you're doing a rehab or knocking something down and building new or trying to do a flip, there's so many variables.
I have
you got
PTSD from doing a rehab.
You might want to work with a mentor or someone that's been in the industry for a while, and just kind of learn from them. I don't think you necessarily need to go spend 10 grand on the guys who run infomercials on the radio about how to flip houses. That's probably the wrong way to go about it. That's probably
just watch some HGTV. You flip this house, you'll figure it out.
Yeah. There's even some YouTubers out there who walk through some of their deals and how they structured them. I've actually seen some on Twitter recently too. There's some real estate investors there now. So there's some places to kind of learn first and just spend some time trying to get your bearings. Spend some time online researching things before you jump in and start taking out a bank loan.
And the other thing too is like try to find a niche. So our good friend John Fedro is a really successful mobile home investor, and he got into mobile homes like in the early 2000s before it was cool. And all the real estate investor meetings we would go to, like people would be like, I got this shitty like mobile home deal, who wants it? And John would be the only one taking them up. And what people didn't realize is his percent returns were off the charts. Like everybody was fighting each other for these like residential 3-2 houses, trying to cash flow like $100 a month, where he's over there like buying these mobile homes for next to nothing and like just getting insane returns. Now he's doing like whole mobile home parks.
He's built an empire.
He really has. I joke, I'm like, John's the mobile home king, but
it's not a joke. It's true.
It's great to find niches. Probably 10 or 20 years ago, like the self-storage buildings, that was probably a huge opportunity. Those businesses have become really popular. So maybe finding an niche. And warehousing was probably hot 10 years or, was undervalued 10 years ago. Now today, all the e-commerce retailers who are buying up warehouse space, right? It's finding where the opportunity will be that I think is really helpful. Yeah,
just like the stock market, but in real estate or crypto or venture capital, startups, it's all the same stuff.
Process.
All the same process.
Absolutely.
Yeah. All right, next question. Richard Z asks, how much cash should I keep in my portfolio? All of it.
You go ahead.
I think it's highly situational.
Yeah.
I think it depends on not only the market environment, what assets you're investing in, as well as your own personal financial situation. It's really
and what
hard.
Strategy you're using.
Yeah.
Like an active investing strategy, you're going to have periods of having more cash or less cash. It's going to fluctuate a lot because you're going to be taking advantage of opportunities, and then in a passive investing portfolio, you're not going to want to have a lot of cash. You want to get it invested.
You basically dollar cost average your income, like put part of your cash flow in all the time and don't think about it. Where active, one month you might be over 50% cash. The other month you might be like, wow, I am fully invested, depending on what opportunities are there.
Exactly. Maybe you've been harvesting gains and your cash position grows, and then you wait for the opportunities, and then your cash position goes down when you start buying those up. So
I was fully invested early April of this year. Now, today I have quite a decent sized cash position again, and that's exactly Why? It's because of what you just said.
I'm going to put you on the spot. What percent cash right now do you think you are?
I think about 15 or 20%.
Okay, that's not crazy.
Yeah, but I also have excess cash as well from some of my shorts. Some of my short hedges provide cash. Now, some of that cash needs to be kept in the account for margin, but I could use some of it to go out and do some gross leverage. Obviously, my net leverage would still hopefully be below 100%. But anyway, that's neither here nor there. But I would say probably about 15 to 20%. I'd have to double check, but
cool.
That's a pretty decent sized cash position.
Yeah, yeah. And I guess you also need to think from like the higher level, like financial planning perspective of like your capital buckets, right? So like, and it did like when you ask like how much cash should you keep? Well, do you have your emergency fund fully funded?
Yeah.
Are you saving for anything in particular, right?
Oh,
There's
yeah,
like
that's
those
like a
steps
whole
too.
nother thing.
Yeah.
The reason I answered the way I did is because it said in my portfolio.
Right.
But when you look at your actual net worth, how
Yeah.
much cash should you have in terms of net worth? That's like a whole nother topic. And that, yes, that depends on things like your emergency fund. Do you run a business? Are you saving for a lot of short-term goals? In those cases, you're going to have more cash on hand.
Yeah, definitely. Okay, cool. Last question for the day, and then we can wrap it up here. Theo is asking, what is your biggest non-investing money mistakes? Oh,
You threw non-investing in there.
That's kind of interesting. I have one that I can just think of off the top of my head, and I don't consider your primary residence an investment per se. It's more of an indulgence. So that was my biggest mistake when I think I was 19 when I started building my first house. I was in the mortgage business. I knew what the hell was coming. This was the early 2000s. I saw the writing on the wall that like the mortgage business was getting out of control. Builders were, building way too much and we were able to get people into homes that shouldn't qualify. So even seeing that, I didn't really understand how much the real estate market was going to take a hit. So I built a house at like probably 6 months before the top of the market, and I saw my value go up. From the time I signed the contract to the time I closed on the house, it went up like 75%. And then the house value crashed by over 50% from the high. So I was like a couple $100,000 underwater by the time I was like a year into the house. So that was my biggest financial mistake, was not listening to my gut and watching the market and understanding what was happening, even though I was like right there. So I took a massive, massive loss on my first piece of real estate, my first primary residence.
Ouch.
Yeah, it sucked.
And that's why every piece of real estate you touch.
Yeah. I don't deal with nails and lumber. I deal with like digital ones and zeros. You get to stay in the AC, you got to work on a computer. I don't know.
What's yours?
Wow, that's an interesting one. I do remember in my early 20s, I had a like small medical bill that I was really mad about because the doctor said it was covered by insurance. Then the insurance company said, no, we're not covering it. And I kept trying to find out, where I needed to go to get this worked out. And the insurance company was like, talk to your doctor. Doctor was like, talk to your insurance company. It was like a $300 bill. I could have just paid it off, but I was mad about it because I couldn't like get this thing fixed, and I just kind of let it go. And then I ended up with like a big ding on my credit report that probably cost me 100 points on my stupid credit score, and so it takes a couple years to work through that and improve your credit score again. I think credit scores, by the way, are the stupidest thing out there.
Yeah.
I hate them. I hate the way that they're gamed. I hate the way that they work, but nonetheless, you got to pay attention to it if you're looking to, do things like buy a home at some point, or if you need to ever have a credit line or open a even a charge card like an Amex or something may require a credit check. So
yeah, there's definitely benefits to it, even if you're not going to use debt, right? Like just being able to like have an Amex card or travel cards where you get rewards points, that adds up to a ton of money over time.
Yeah.
Like I don't think I've really paid for a flight in many, many years. And pre-COVID, we used to fly all over the place.
Yeah, I actually agreed there too. That was another one I was thinking about potentially using. Was I wish I'd done the rewards card thing a little earlier.
Sure, yeah.
There was probably a lot of spending I did on my debit card early on in my 20s where I should have been getting rewards for it.
Yeah. It's free money.
Yeah.
Nick, cheers.
Mine is and I actually talk about this. Do as I say, not as I do. I've learned from my mistake, and I talk about it now as something to really watch out for, is not paying attention to like subscriptions that are constantly charging.
Oh yeah.
And you know, when you get busy, you don't have time to check your statements and comb through everything. And then sometimes things get lost, you forget about stuff, and you've got hundreds of dollars racked up in subscription stuff or fraudulent charges that you didn't even notice. And so paying attention is really, really important.
Yeah, especially in today's world where everything is subscriptionized. What's the word? Like companies got smart. They're like, look, if we can just get people on auto bill, like they're just going to let it go much further. So
no, and it works.
So
don't fall into the trap.
Yeah. Yeah. It's like $4.99 a month here,
Yeah.
$12.99 a month there. You're like, whoa, I just spent $4,000 a month on like stuff I didn't even know about. Right.
Yeah,
So
exactly. Just pay attention and
So putting your
The buck
financial
stops
hat
here.
on, yeah, like what's a good habit? We can wrap up on that. Like,
yeah, I something I do is every single month I comb through everything and make sure. I can't do it every week because I just don't have the time, but every month at a minimum. And then make sure if there's fraud or if there are subscriptions that you're not even sure what the hell they are or you're not using them, send out some emails, get it all canceled.
yeah.
Don't
I
let
think
it go
there's
for that long.
Isn't there like a software program or a SaaS that does that, like unroll for you or something? Maybe we'll have to look
There's
into that.
something that actually will help you negotiate your bills,
Oh, interesting.
which I don't remember the name of
We'll
it.
do some research and pull that up on the next show. Cool. All right. Well, guys, what are you most excited about coming up this week or next week in the markets or just in general?
Well, we don't have any earnings, right?
No,
Pretty
no.
quiet week.
It's pretty quiet.
Yeah. I mean, I think for me is like, we're just at big inflection points in the markets, right?
Agreed.
Like there's definitely, when we get to these moments where it's like, okay, the markets could go one way or the other and like the momentum is building and building. I don't necessarily think it's smart to try to guess what's going to happen, but have plans on how you can respond no matter what happens, right? It's like, you're not trying to predict the future, but you're trying to have a plan for whatever the future throws at you.
Yeah.
Yeah. If the future wants to throw us another 20% correction in the market, we've got cash.
Yeah, get juicy, get ready for it.
I'm excited for turtleneck season, frankly.
I cannot wait to be basic and wear my Uggs and go get my pumpkin spice lattes.
I don't know, man. I don't want boat season to end.
No. Yeah, you're right. That's a good point.
Yeah, we'll just have to go further south, chase the warm water.
Yes.
Cool. All right, guys. Well, thanks for hanging out with me today. Another good show on the books. Thank you guys for watching. Hey, don't forget, go to wetalkmoney.com, submit a question for the show. Go to iTunes, leave us a review on the podcast. We just started publishing the audio episodes. If you're on YouTube watching this, subscribe, share it with anybody you think would get value from it. And we will see you guys next week. Take care.